Welcome to the Transparent FX Academy. This will be a very important tutorial, so make sure that you stick throughout the entire video without skipping any parts. So without further ado, let's jump straight into it. In this video, I will break down some of my favorite trades from my strategies. Now, as usual, I'm one of the only traders without fully verified my FXbook account. So all of these trades are already there and they cannot be made up. So let's get right into it and learn as much as possible from these setups. The first one I want to speak about is the trade here on gold. So let's see what kind of situation there was when the trade was executed according to the rules of my strategies. Now, starting here from the monthly time frame, we can see that we had a perfect uptrend. The market was creating a series of monthly higher highs and higher lows. We already had a minor correction. There was definitely a possibility of seeing more bullish continuation. Dropping down on the weekly time frame, we can see how also on the weekly, the uptrend was quite clear. The market was printing a series of weekly higher lows, and the market had just created yet another higher low. Therefore, there was good probability of seeing more bullish price action being printed away from this zone. Now, dropping down on the daily time frame, what did we have? Now here on the daily, this is where things were getting very interesting, because if we look closely, what we can see is that we were seeing a series of equal highs created at this zone. And at the same time, we were seeing a series of higher lows. Now, this pattern here is commonly referred to as an ascending trend line. In fact, when you see a situation like this, where you're seeing equal highs being printed at a resistance area, so every time the market is failing in creating continuations to the upside from a certain zone, but every single time the market is then going back to a trend line and creating higher lows, usually that means that buyers are still in control, because every time they're creating higher lows, and at some point the market will break out to the upside. And that is in fact exactly what the market was doing here. We were seeing these higher lows showing that buyers were in control, and at the exact same time, equal highs were being created at this level, which usually means that the market at some point is going to break out to the upside, since buyers are already prevailing on sellers because they're managing to create higher lows. So this was the situation on the weekly and daily time frames, and also the monthly time frame. So essentially the big picture that the market had. So let's go down on the intraday time frames and see what kind of situation was being created here by the price action. Now, if we go down here on the intraday time frames, we can see that when it comes to gold in this situation from an intraday perspective, we were seeing a big push to the upside, consolidation, and the market was again in the impulse phase. However, while it was in the impulse phase, it was also breaking out to the upside from a very important level, because we can see that in the past, this was exactly the area which held the market even when the market had very strong bullish momentum. The market tested its zone and rejected it to the downside very, very aggressively. Now, as the market was breaking out away from this very important level, that is where the rules of one of my strategies were satisfied. And the strategy I'm speaking about in this case is my gold sniper strategy. And you find a full breakdown of that strategy also with the historical backtest on over 10 years of data, so thousands of trades, directly on my website. So if you go on my website, you see a full presentation of this strategy. Now, in this case, this strategy ended up creating a perfect setup with a perfect 1-to-4 risk to reward. And the market in the end managed to go precisely at TP and actually even exceeded the take profit in the end with a massive 1-to-4 risk to reward, as you will now see. So first we had a massive impulse to the upside, minor consolidation period, and then another impulse to the upside, which smashed the take profit with a nice 1-to-4 risk to reward being taken on this setup. What was going on when it comes to the commitment of traders analysis, and also in this case, institutional buying was very, very aggressive supporting the overall trade setup. In fact, we were seeing a massive surge when it comes to the net positions, going from 161K all the way up to more than 200K net positions, with institutions increasing their longs on gold, going from 234K all the way up to more than 260K, and shorts were getting decreased. We had the high here at more than 80,000 shorts. We were going down to around the 55,000 mark. So clearly institutions were increasing their longs and decreasing their shorts. So now that we have spoken about all the different aspects, let's move to the other setup I want to speak about and learn as much as possible from it, which is the setup that was going on USD JPY. Now, what was the situation? Well, here in the monthly time frame, we were seeing a massive rejection away from a strong monthly demand and support zone. From here, all these previous rejections to the upside were happening. The market was rejecting the level to the upside quite aggressively. We were seeing another test of the zone and rejection to the upside. As the market was rejecting this strong demand and support zone from a weekly perspective, we were also seeing a triple bottom being created around this zone. The market was also breaking to the upside a quite important structure level, which was this zone here. This level was acting as previous support, turned resistance here, and the market was breaking it to the upside once again. So monthly and weekly were both quite bullish. Dropping down on the daily time frame, what did we have? Well, here on the daily, the breakout to the upside was quite clear. We were seeing a perfect inversion of trend. We were going from the creation of daily lower lows and lower highs to the creation of daily higher highs and higher lows. So the market clearly was breaking out to the upside. And if we go and see what we have when it comes to the commitment of traders for the JPY, as usual, we have to keep in mind that the JPY, when it comes to all currencies that on the spot are traded against the USD, means that we are looking at the data for JPY USD. But if we want information on USD JPY, we simply have to reverse everything. And in this case, we can see how it went from 179K all the way down to around the 80K range. So what was happening is that a lot of institutional selling of the JPY was happening, which means a lot of institutional buying of USD JPY, because if institutions are shorting the JPY, they are longing USD JPY. And in fact, that is exactly what was happening, going from 21K all the way up to 78K shorts on the JPY, so longs on USD JPY, making it stronger and supporting the breakout to the upside, which was coming, as we have just seen, with strong institutional buying. So now if we go down here on the 15 minutes time frame, so the intraday time frames, what we can see here is that we had a market which clearly was stuck in this range. So we had a consolidation area in which the market was bound in between two levels. And what was happening here is a breakout from a consolidation period, which usually is followed by an extended leg to the upside, or in other words, an impulse to the upside. Now, obviously, as usual, I do not share all the rules of my strategy, but in this case, all the rules were satisfied for my Terminator strategy. And you find a full breakdown and historical backtest over more than 10 years of data of this strategy on my website. So the full description of essentially what kind of base concepts this strategy has. And in this case, what we were seeing is that this strategy was looking for a 1-2-3 risk to reward to the upside. And in this case, it played out perfectly. The market created a huge breakout to the upside after this consolidation period for a very nice 1-2-3 risk to reward ratio. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed this tutorial, make sure that you click on the like button. Also, let me know in the comments below any new topics that you would like me to cover in my next tutorials. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.